Today. I'm so happy to be here again. Um, Today we have someone special, within us that would be giving us some knowledge on the topic that is laid before us today. I want to thank you once again for joining today. Happy New Year to everybody. Yes, last year was wonderful. We had several intellectuals that gave us good topics and taught us so many things that we did not know before. And today is another day like it has always been. So I want to welcome everybody once again for joining. As we expect more people, I will try to go ahead because we don't have a lot of time. So today we'll be having Mrs. Okeroghene Egumor, right?
You
Okay.
tried. Yes, ma'am.
Okeroghene Egumor. But before that, let me introduce myself properly. My name is Joyce, Mrs. Joyce Ezigo, and I'm the facilitator for today's meeting. Um, yes, that's about that. Welcome once again. So today, Mrs. Egumor will be taking us on a very, very important topic, which is understanding your financial independence number, this the spend down process, and the US probate court system. I mean, this is packed because I I don't even have an understanding on that. But she will be going deep into this to let us know what we don't know. So Mrs. Egumor is a registered nurse and midwife in Nigeria and USA. She graduated from College of Nursing Sciences, not College of Nursing Sciences.
College of Nursing
Yeah,
Sciences.
yeah, College of Nursing Sciences, Delta State. Sorry about that. 2006. She graduated from State School of Midwifery, Asaba Delta State as well, 2009. She graduated with a Bachelor's of Nursing from KAAF University College, Ghana, 2021. She is a licensed financial professional in Texas. 2024, she has broad range of nursing expertise from ICU, cardiac, telemetry, psychiatry, and maternal and fetal medicine. She is currently assisting families with financial planning, insurance plans, college planning, and retirement planning. So that's who Mrs. Oke is. And I would like to encourage all of us to listen to her because I'm one of our clients. When she, broadened my knowledge last year about some things I did not know about insurance and finances, I said, let me try, and it has been a good journey so far. So I would like us to open our ears and tap from this knowledge today. Thank you for joining, Mrs. Okay. I'll hand over to you. So you have 30 minutes now, and then afterwards, there will be question and answer for 30 minutes because this is a 1 hour session. Thank you.
Thank you so much. Good evening, everybody, and Happy New Year. My name is Okeroghene Egumor. I want to say thank you to the leadership of this great group. It's been wonderful with them. If you're on this platform and you've been seeing all the information that they are ditching out, you need to give kudos to all the executive on this platform because they're doing a lot. And most of these things they bring to us at our doorsteps, these are things that you have to go pay for most times, but they are bringing it to us free of charge. So in this community, you are a Nigerian in West Texas, you do not have any excuse to live below standard in America. And I pray that God will help all of us in Jesus' name. Now, as a way of starting, understanding your financial independence number, the spend down process in America, and the US probate court system. I want to tell you that all of us, while growing up, especially those of us that really grew up in Nigeria, you will remember that uncle who once traveled abroad and came back to Nigeria and was living in abject poverty. And you're wondering why. What happened to him? Most of us will say it's village people. Okay, it may be. But then what really happened? He was in America for 15 years, 20 years, 25 years, 30 years. Could it be that he didn't have this opportunity? This information did not get to him. He was never privileged to hear anything that has to do with finance in America, it is possible. It may not actually be village people. Now, before I move forward, I have some book recommendations before I move forward so I don't forget. One of them is Saving Your Future. The other one is The Retirement Miracle. The third one is The Wealthy Physician. That one I recommend mainly for doctors. If you are a doctor in this group, please read that book, The Wealthy Physician. And then the last one will be Money, Wealth, and Life Insurance. Those are the 4 books I would recommend because they said readers are leaders. Understanding your financial independence number. Let's move forward. Now, financial independence is a kind of very critical foundation for you to be able to stabilize yourself at the end of your life. Now you are working, you have the strength. The youth, you are still strong, you are still being able to pick shift, to do extra shift, work overtime and all that. A time will come when you are no longer able to do that. How do you cope? What plans do you have? That brings us to these questions. What are your plans for retirement? And if you have plans, okay, if you can no longer clock in or clock out from work, you can no longer go to work, how long will your savings last you? Maybe you have 100,000, 200, 300,000, $1 million. How long is it going to last you? We're going to find out today. If the reason why you cannot go to work tomorrow is as a result of sickness, how do you intend to maintain your lifestyle, your current bills, your mortgage, your kids' fees? How do you intend to maintain them? Now, currently as you are now, can you say you have 10 times your current annual income? Now, if you don't have that, how do you plan to get 10 times of your current annual income? Because if you are retiring, probably you are 40 now, and then your retirement will be at age 65. If you minus 40 from 65, you will have 25 years, right? So you still have 25 years. Now, those 25 years that is remaining, if you say you want to work for those 25 years, probably you've not saved anything at this time, or you have saved only $10,000 or $20,000. For that 25 years remaining before you retire, are you able to work? Do you know how much you need to keep to be able to retire well and retire strong? Let's move on. So your financial independence is a very critical foundation, and it gives you protection against unexpected life events. And you can see all the references from where I got all this information from. Disclaimer, these are not my information. The references are under at the end of this presentation. And I don't stand to say I know it all. I am a licensed life insurance agent here in Texas. I just got licensed in New York and also in Indiana. As we move ahead, we'll talk more about that. Now, the spend down process and the probate system significantly influence how your assets are preserved. All that you have worked for, how they are preserved, or how they are depleted, or how they can be transferred. It is 3 different things there. Look at the words. Those words are chosen. How your assets are preserved, how they are depleted, or how they are transferred within the United States. They did not say Nigeria, within the United States. Now, understanding your relationship between financial planning, healthcare costs, legal costs, will give you the ability to be proactive in your decision making. What then is this financial independence number? How do I get this number? How do I know this number? Now, this number is a number that comes up when you put in your passive income, your assets, your living expenses, everything together. And then you try to say, okay, if I'm going to live for this period of years, how much do I need to sustain myself? So if you have a pen, let's look at it. You're going to start with, how old are you? It is individualized. You don't need to tell me, calculate your financial independence number, because it is what you do. You will know, and then you will be able to plan. As the saying goes, he that fails to plan is planning to fail. How old are you? That is one. That is the first question. The second question is, how much do you have saved? Whatever amount you have saved now, put it there. If you have nothing like zero, put it there. You're going to use that number later. Now, how many years do you have before you retire? Most people want to retire at 65, some 70, some 75, as the Lord gives you strength, right? So, how many years do you have before you retire? Write it down. And then when you retire, how long do you think you want to live on earth? That's a question most of us have not really sat down to like ask, right? Some people say, I want to live for only 80 years. I don't want to stay more than 80 years because I don't want people to be cleaning me up and all that. Okay, that's you. Some say, okay, I want to live for 90 years, some 100 years, as God gives you life, right? Now, if you already know those numbers, if you are 65 years, if you are going to retire at 65 and currently you are 40, when you subtract that number, you will be left with what, 25 years, right? Now, if you say, okay, when I retire, the amount I want to retire with will be maybe $5,000 every month. Probably I've paid up all my debt. I'm not owing credit card. I'm not owing any mortgage. Just living expenses, vacation with my wife, my children. Maybe the children, they've even gone on their own. Just me and my wife. Little vacation for both of us and all that, right? So 5,000 monthly. Now, when you multiply 5,000 by 12 months, which is for a year, you have 60,000. That means your total annual expenses will be around 60,000 because you're living like very low income because then you sort out yourself, right? Now, if you are going to be living on 60,000 a year, multiply that 60,000 by the number of years you have between now and your retirement, which we did initially. So you subtract your current age from the age with which you're going to retire, right? When you subtract it, I just gave an example. If you are 40 years now and you're going to retire at 65, subtract 40 from 65, you get 25 years. Okay? Mathematics time. I know many of us didn't like mathematics when we were in school. All right. So now I subtract 40, 65 years minus 40 years currently, I have 25 years, okay? And I'll be living on a monthly budget of 60,000 in a year. So I'll multiply that 25 years, multiply it by 60,000. That gives me 1.5 million. That is my annual income that I will be living on during my retirement years. Now, if I have 1.5 million because I am living, okay, so 65 years is what you have. Okay, so now if you're going to say, okay, I'm going to live on this earth I'm going to live till 85 years. So let's say 85 minus 65, that gives you 20 years after retirement. So between now and your retirement, you need to have 1.5 million saved. That's what you need before you retire, okay? Now, after you retire, you're living on 60,000 every year. You divide that 60,000 by 20 years. 60,000. So we said 60,000 multiplied by 25 will give you 1.5 million. Divide that 1.5 million by your current age now, which is 40 years. Every year, you're supposed to be saving 37,500 to be able to meet that retirement plan. 37,500 to be able to save for that your retirement. Now, how many of us are really actually able to save that? If we look at it, that is your financial independence number. So if you look at it, okay, by the time I retire, from when I will retire, age 65 to age 80 or 85 years, I need to save, I need to have about $1.5 million save or $2 million save. How do I achieve that? That's where retirement planning come in. Now, I've already given you all the clues. Some people will say, okay, concerning my financial independent number, you can decide to say, okay, I want to use the 25 times rule, which will now give you your annual spending, how much you spend every year, times 25. That will give you your target retirement nest. That's another way to calculate it. So I've given you two ways to calculate your retirement planning. So for example, if you're spending, probably now you're earning 65,000 a year, and by time plus other business and other things that are coming in, you're able to, or extra shift overtime, and you're able to make $80,000 a year. Now, 80,000 times 25, that gives you 2 million. That is your target retirement nest. So if you're going to work with that, how do you intend to save that? That is where people buy things like life insurance, and then they buy the index universal life. You can buy $1 million policy. You can buy 500,000 policy. You're using your income of $100, 150, 200, $500 to buy a large amount of money in case something happens. Remember those questions I asked. If you're not able to go to work and then something happen, then you have something to back up with. That can cover your mortgage. That can cover your living expenses. Because these companies, if anything happened that you're not able to perform two activities of daily living, you will be able to get 90% of that total amount. So if you put in for 500,000, you should be able to get 400,000 to 450,000, right? Now, let's go down to what are the factors that can affect or influence your financial independence number? Your lifestyle choices, your spending habits, and then the size of your family. Those are things that can affect your financial independence number. Now, that does not mean that if you have $2 million saved, it can cover you for the rest of your life. That is just the basic expenses, basic living expenses. Okay, if now, for example, healthcare costs coming, which is the second factor, and believe it or not, with old age come a lot of sickness. We pray for good health all the time. We pray that God gives us good health. We agree. But then with old age comes diabetes, hypertension, stroke, cancer, and all of that. It's not our portion. But if you are now faced with healthcare challenges, that will influence your financial independence number, because that number is going to increase, because you start talking about buying drugs, going for hospital visits, doing tests, and all of that. Another factor that can influence your financial independence number is your debt. In this country, we have a lot of debt. I'm going to show you something. I don't know how many of us have seen the US debt clock. And then you will see how much you are already owing in this country that me and you were living in. I'm going to show you that. That's going to be the last part of this presentation. Now, your debts. Okay? Dependents. The children you have, if they have to go to medical school, that's expensive. If you don't want them to get student loan, in Nigeria, where we came from, our parents trained us. We don't know anything about student loan. And then you are in a country now at 18 years. You're going to college. You're already owing 100,000, 200,000. Before you get to 25, student loan debt is already piling. And then by the time you say, okay, I want to buy a house, mortgage will add to it. Debt. That's another one. And then you move on to talk about taxes and then investment risk. There are a lot of risk in investing, right? When you invest, there are a lot of risk. Some people are into real estate. Beautiful, beautiful business, wonderful business. I love real estate. But then it has to go with proper planning, because if you have a lot of real estate and you don't plan how you're going to pay off those mortgages before you retire, where they start paying you, then you are incurring debt. And if anything happens, it's going to affect your financial independence number. Now, let's talk about the spend down process. This one is the first shocker I got in this country. When I came in 2022, and then I know a lot of us have lived in America for a long time, and we have more experience and we know a lot of things. I came in 4 years ago or 3 years ago, and then when they say come and apply for Medicaid, people are talking about apply for Medicaid, and then you go there, they look at your finance, they say, no, you do not qualify. Why? Because it is for the poor. Now, the spend down process in America, it is reduction of your personal assets for you to be able to meet eligibility requirements for government assistance. So if you go to government now to say, I don't have a job, or I don't have money, I want to apply for Medicaid, they'll tell you, don't worry, come, we will help you, we will assist you. But then you must prove to them that your total assets is less than $2,000. Now, if you have a house in Nigeria and you have businesses and you have other assets, they are going to look back 5 years. 5 years is the look back period. They will look back to be sure that your countable assets were not given out to people for you to pretend that you are poor. All right, let's move on. Now, this spend down process, it has wrecked a lot of families because the information was not given. Many of them didn't know. You think, oh, the government is there to help me. Yes, the government is there to assist you. But that's taxpayers' money. And that can only come in when your total income is less than $2,000 as a single person. And if you're a couple, it's between $3,000 to $4,000. And then they are going to check if you have CDs, if you have stocks, if you have bonds, if you have mutual funds. They're going to check all of that. And if they see that, they're going to tell you, you need to spend all that money. When you are done spending all that money, paying for your bills, paying for your nursing home care, then you can come back and then we will approve you. They're going to check your mortgage, you're going to check your credit card and all of that. So if you have money anywhere, you must spend that money before you're giving any access to free access or free healthcare. Now, why does this process occur in the US? Because healthcare is expensive. So you cannot come and have money somewhere, keep your money, and then you want to access the free benefits. Some people will come and say, oh, I will play the system. I tell you the truth, they're going to find you out. That is America. It may take time, but they will find you out. So this program, the Medicaid program, is a need-based program. Somebody that really, really needs it. So that's why they are very strict with your income and your assets. You must meet that limit before you are given anything. Now, what are those assets that they count during the spend down process? Your cash, savings account, checkings account, investments, any additional real estate property, those are countable assets, right? And then your primary residence, they may count it, but they may not really like deal with it because at least they can't make you homeless. So your primary home or your personal belongings, one car, those ones are not countable assets. Those ones will be given to you. They will leave those ones. But you see anything extra, those ones must be totally spent or sold before you gain access, okay? Now, the impact of this spend down, it means that all your life savings must go. It will reduce your financial security to nothing. But then when you weigh the options, you say, oh, I have 2 houses, and then I have a condition that I need to manage health-wise. You want to choose your health. You want to sell those houses of it, especially if you've not paid off the mortgages. You want to sell them off to say, okay, whatever it brings, let it bring. But at that time, you're not even thinking of those things. You're not thinking of those assets anymore. You're thinking of your life. So proper planning is what is more important. Now, this spend down process will make families to become what? Poor. That's the truth. You will spend everything. And then probably what you had in mind to say, oh, these are for retirement and all that. Challenges have come. The system will force you to spend it down or you don't have access. You have to pay out of pocket for healthcare. Now, let's move to the next, which is the US probate court system. This is the one I fear most. I know some people in this group, those that have lived here for long, they might have seen 1 or 2 persons who has undergone this or currently know people who are in this system. Now, this is a legal system in this country by which they validate whatever you see, you have. The court oversees whatever you have, your will, whether you wrote a will. You know, in Nigeria, it is the head of the family that will decide the property of a man who has passed on, right? But here the court decides your debts and then your property, if they will be transferred to your family members or not. Now, what does this system do? This system will check as soon as someone passes away, the court system kick in. Your bank account will be frozen, all your assets will be frozen. They keep everything in check and they tell you until we're done, you cannot have access to any money. So if you have a wife who is not working, she can't have access to money. Probably you have $100,000 saved. She cannot have access to that. So the court system will check everything you're owing. This system can take 1 to 2 years, sometimes 3 years, before they are done with the whole process. Now, they will look through your assets, look through all the things you have, and then they will decide, they'll pay off your debts. Student loan, they'll pay it off. They'll pay your credit card off. They'll pay your mortgage off. If anything is remaining, they will not take the charge, the court fee. Every fee, the legal costs, they are going to take it off. When they take it out, whatever is remaining is what will be passed on to your family. The question you have to ask yourself now, with all the assets you have, are they protected against this probate court system? And the only thing that will not go to probate court system, life insurance proceeds. Some states will not allow your 401k or Roth IRA to go through it. Some states, not all states. Annuities will not go through the probate court system. If you put on your bank account, a member of your family say payable on debt, most bankers will not tell you this because they don't want you to know. On your bank account, there is a part that says you can go to the bank and tell them, I need a form to say that if I pass on tomorrow, it's called the POD form, payable on debt. If I die, pay the money that is in my account to this beneficiary. That person must be an adult. If you put a child, it's going to go through the probate court system. Another one is for your investment accounts, your stock, your bonds, your CD, your mutual funds. Transfer on debts. You should have those documents in place. If you have that in place, put the beneficiary there. That beneficiary must be an adult. If it's a child, it will go through a probate court system. Now, if you have a trust, whether it's a revocable trust or an irrevocable trust, and you put all your property, everything in that trust, a living trust, then it will not go through a probate court system. All right. If you have a real estate, probably you have houses in many states or in different places, the TOD form, transfer of on debt, which is the TOD form that you put on your investment account, put that form on your deeds. That property will automatically transfer to the beneficiary. All right. Now, how does this probate court system affect us or affect an individual? It will delay your access to finance or access to your assets by your living or your available family members, surviving family members. Now, there are court fees, there are legal fees, administrative fees, and all of that. They are going to deduct all of that from whatever proceedings you have left. Okay? And they will decide, the court will decide how your assets will be controlled. Now, what are the strategies to reduce the spend down process and probate impact? Early financial and estate planning can help you. When you see people talk about life insurance, most people will say, oh, I'm doing term insurance. What is the probability that you're going to die in 30 years from the age that you are now? And then for your term insurance, yes, you may be paying low. It's still available to you now. What about if it expires while you are alive? Will you still qualify for any policy? Okay, another thing is annuities. Annuities. You put either you've worked, some people have worked in this country for 20 years. Go to all the places you have worked, roll over all your 401k into one single account. That is the annuity account. And allow compound interest to work in 7 years, in 10 years, and see your money grow. Now, legal tools that you must have to reduce this spend down process is a trust. If you have so much property and you don't have a trust, you are just working for the system. And that trust must have a designated beneficiary. If you have proper planning, you will not even need to apply for Medicaid tomorrow. You will not need it. Now, in conclusion, financial independence and planning, these are all awareness. They are all interconnected. But these are information that we need to be able to prepare for tomorrow. Prepare in case of anything, in case of emergency. If you are proactive in your planning and you make informed decision, you will have a smoother transition. Now, but before I quickly stop, I want to show us, let me stop this share and show us. I'm going to go, still sharing, I'm going to go to Google right now. So you will see that if you look at my screen, can you see the screen? This is the usdebtclock.org. And in this US debt clock, if you look at it, you will see the numbers are moving. It is constant, right? It is ongoing. This is just a real time showing you the debt that this country is owing. Now, I want you to take a look at this number. This is the national debt. Look at this one. Debt per citizen. Me and you in this country, $112,580. Debt per citizen. Look at the next one. This one says debt per taxpayer. $355,810. These are live. This is a live figure. You can see the figures moving. This is online. You can go there. Take the let me see if I can copy this and put it in the chat. That's the link. Let me see, chart. There you go. US National Debt Clock, real time. So I just put the link on the chart so that you can actually look at it and see. Now, some people believe that we are trusting in our social security. My social security that I'm paying now is what I'm going to fall back on during retirement. Look at the depth of social security. I don't know math. I cannot even call this figure. If it is 1 trillion or 1 billion or 1 zillion, I can't pronounce this. But look at this. This is the depth of social security as of today. And it's counting. You can see the figures. It's there. This is the debt for Medicaid and Medicare. Are we seeing it? If you come to this side, you will see this is the revenue. Money that is being made. That's what is green now. Revenue per citizen, just $15,000, 557. So what am I trying to say? If you don't plan and you're waiting to say, yes, I'm in the country of the free, and this country is going to make me wealthy tomorrow, or this country, I'm going to depend on them to be able to get my social security or my Medicare and Medicare. Are you willing to sell all your assets, including the houses you have in Nigeria? Because they're going to look back 5 years. Are you willing to run down your total savings to $2,000? What about our children who at the age of 18, they're already owing student loan? Your parents didn't give you that. You were not owing debt from Nigeria. Your parents paid your fees. So what plans do we have for them? Do you know that as little as $30 that you used to buy McDonald's every week can give your child an insurance policy that in case anything happens tomorrow and you as a parent cannot afford college, they can go to college? This information are there. To whom much is given, they say much is expected. You have heard, and your future will not forgive you if you don't take action. If you want to know more or you have more questions, I know there will be time for questions on this floor. You can reach out to me. Thank you, and thank you for this opportunity. I want to thank this wonderful group. Thank you, the admin, for the Nigerians in West Texas. You're doing a great job. Thank you so much. Over to you, ma'am.
Thank you so much, Mrs. Oke. This is so much. I've not seen this kind of thing before. This usdebtclock.org. So as it is now, I'm owing the government.
That's what you're seeing there.
This is so strange. Like, really, I've never seen this, if not that you showed it today. So I believe that a lot of people have messages here. Let me check the messages or you're the one that sent a message. Okay, yeah. They said you should repeat the name of the books you listed when you started.
Okay, thank you so much. So I gave some book recommendation. One of them is Saving Your Future. The second one is The Retirement Miracle. The third one is the wealthy physician that I recommend for our doctors, medical practitioners in this group. And the fourth one is money, wealth, and life insurance.
Okay, thank you so much. So I would like to let everyone know that this session is recorded, and we can all go back to YouTube in case we want to get some knowledge that we miss here right now. So Miss Okay, I have one question.
Yes, ma'am.
And actually, someone that came around here, because I'm still in my business space, heard you and was asking me questions. He said that he's on another policy and that he wants to change. I think
Yes.
he's on $1.2 million policy. So he's looking at changing and starting with your own with you. So he said, is it possible for him to change?
So it depends on the kind of policy he has. If he comes in, we're going to look at it and see if it's a term insurance or a whole life insurance. Some of them are convertible, some are not. So it depends on what he has. That's a personal information that will be discussed between me and him because we don't discuss because of HIPAA. We are guided by HIPAA. The license is guided by HIPAA. Personal informations are not shared. So he can get my number 318 290 8074. You can send me a message or call me.
Yes, I will
We
give
can,
I'll give him your number. I can give
thank you,
him your
ma.
number.
Thank you, ma. So
Yes,
we can
I'll
look
give
at
him
that. Thank you
I'll
so
give him
much.
your number. So I would like to also tell us that okay, there is one question here. It said for immigrants who own property or land in Nigeria, does foreign property count as a reportable or countable asset during the Medicaid spend down process?
Yes, so thank you for that question. That's a very good question. So yes, during the Medicaid spend down process, they're going to look back at when did you build that property. So if it is within 5 years from when, so the look back, I said before that the look back period is 5 years, right? So probably for example, if we're in 2026, they're going to look back 5 years behind, which would be like 2021. So if that property was between now and that 5 years, it's going to be countable as an asset. But if it is you got that property probably before that time, it may not be countable, right? So that's what they do. They have to look down all your assets within 5 years. I don't know if that answers your question.
I believe it does. Thank you so much for the response. And please, we have a lot of people today. This is one session that a lot of people pay for to understand these things. There was a time I had to pay for this class, and today we are getting it. I mean, we are privileged to get this free. If we have questions, Mrs. Okay is here now. We still have some time. Please, let's type our questions and ask her. Or if we
Okay.
also want to call her, we can call her as well. So, Ms. Okay, there is another
There's
question
a
here.
question here. Yes, ma'am.
Yes. It says, what is one common mistake you see immigrants make with financial planning that could have been avoided with early education?
Thank you so much. One of the mistake I see, I've not lived in US for a long time. I said that before, but one of the mistake I see is lack of proper protection. Now, many people believe that life insurance is like insurance in your car. You believe you have insurance in your car, you have insurance in your house, but you don't have insurance for your life. Does it make sense? Now, you make money and you spend the money. If you look at the American system, some people will say the money you make in America stays in America. You don't spend it, it doesn't go out. Maybe probably you are able to build one or two houses and that is it. When you don't save, now saving may be saving from the money you're making from your job, right? Or from your business. But how much can you really save? 1,000 every month? 2,000? 3,000? How long would that take you? So most people, one of the financial mistake I see is not taking advantage of opportunity. Information comes to you. You see this platform, this group. From the day I joined this group, I have been thanking God for the leaders of this group. Well knowledgeable, well grounded. They give information. Some people don't even read the information they post on this group in a month. And then they will come back tomorrow and say, hey, I have a
Yeah.
problem. They
Mm-hmm.
should raise a
Yeah.
GoFundMe for me. How much can a GoFundMe really do for you? If we raise a GoFundMe, probably 10,000, 20,000, how long will that last? Plan for your future. Because today you are saying it to say this information, I've been hearing it everywhere. You are hearing it everywhere because it is a movement to liberate us. You see, our counterpart, the white people, they know this information. They don't announce it. The few ones I've interacted with, they'll tell you, yes, they have life insurance policy and they have the index universal life. They're not doing term. They are selling term to us because it's cheap. We want cheap. But then $100 can give you a good policy. $150, $200. What about for children? $30, $50. So it's lack of financial planning and not taking advantage of information that come to us every week. You see, the admin of this group is if we want to pay them, we cannot pay them. Every week they posting information that will benefit us, but most often we don't look at them. How many of us has actually gone back to that YouTube channel to watch the videos that are there? Educative videos, I tell you. Very, very informative. If you don't take if a white man wants to give you access to information, he's going to put it in a book. Thank you.
Thank you, Miss Okay. So I was gonna ask again, can you buttress the trust for us? Because I mean, when you were talking about trust, I had to even go to the dictionary to understand what trust means. I've not really heard it before. But I mean, I'm not a financial expert now. Yeah, you know.
Right.
So
So for the
I would like
trust,
for the sake of people who don't know these things, if you can
yes.
buttress it, that would be fine.
So for the trust, we have the living trust, we have revocable trust and irrevocable trust. So what we do, we refer you to the legal people that organize a trust. Now, what they do with the trust is that they put all your assets, just like you do a will, right? When you write a will to say this person will be in charge of this person will be in charge of this. But this one, the trust will manage it. You know that in America, there are a lot of killings because of property, because of money, because of insurance. If you watch most American movies, when they are doing investigation on the crime scene, you will see one of the things they want to find out is, was life insurance involved? Because these people can actually kill themselves because they want to collect that death benefit, right? Now, what the trust does when you have those assets, the trust will give directive to say, okay, if this man pass away, at every year, this child, you may have 3 million, 300 million there, whatever amount you have there, 3 million, 10 million, and all that. They say this child, we have only 30,000 every year. And that's what they will give to the child. So it's a legal thing that binds the family. And at the end of the day, nobody is killing themselves, nobody is fighting. But then your property is saved, your family is taken care of, the probate court will not have access to your assets, and then you too, even if you retire and you can no longer hear, you can't see, you can't do anything, you know that you've settled your family.
Yeah. Thank you so much. So, I mean, to be very clear, you're saying that it doesn't matter what the person owes. Say, for instance, I mean, life happens, someone dies. The person
Hmm.
doesn't, I mean, the person's account will not be seized. I mean, the
No.
person doesn't have to pay the things that they owe. It's just
Mm-mm.
that the binding agreement on that trust will be fulfilled based on what is, I mean, the person will be
Whatever
getting.
agreement that's whatever is in that trust will be fulfilled. Now, you said something that the person will not pay what they owe. That's not true in this country. If you
Hmm.
owe debt, you're going to pay one way or the other. America will transfer the debt to the children. So that's one
Okay.
information we should know. So in acquiring properties, as we are collecting credit card, as they are giving it to you free of charge, they mail it to you to entice you to say, oh, you have 3,000, 25,000. Know that those debts, if you cannot pay, it will be transferred to your children.
Okay.
But then whatever you put in your trust, your living trust, will be allotted. It will be divided as you have stated it.
Okay. All right. Yeah. So, I mean, there is another question. Sorry, Miss. Okay, I know you can see the question, but the reason I read it out is so that everybody can know.
Yes, ma'am.
Yes. So there is another question that says, if someone can only take one action this year after this session, what would you recommend they prioritize first?
Thank you so much for that question. As a matter of urgency, the best time to get an index universal life protection for yourself, for your family, or an annuity. It is two. An index universal life protection or an annuity, the best time was yesterday. The second best time is today, because tomorrow is not guaranteed. In this Midland, Texas that we are, you know the number of accidents that happen every day. God forbid, it's not our portion. The blood of Jesus is our sure insurance. But then if you go out tomorrow and something happens, what form of protection do you have? Now, let me shock you. Do you know that we deal with a lot of companies, but one of the company, do you know that if you only pay for that protection for today, this month, you pay for this month, and you go out and anything happens to you, they're going to pay you that $500,000? Amazing, right? Who does that? Where will you see it? It doesn't exist anywhere. But that's the truth.
Yes, thank you. Thank you for that. I also have another question. I encourage all of us to ask questions, so that this is interesting. For business owners, entrepreneurs, why do you think that an IRA is important?
And IUL.
Is it
Um,
IUL?
yes, Index Universal Life Protection. So it's
Okay,
IUL.
okay,
So for
all right.
business owners, that serves as a cushion for your business, right? So peradventure, you have that business and then you can no longer go to business. You can't, God forbid, but you can't go to business tomorrow. And then will that business still thrive? No. Probably, okay, I want to employ somebody and put somebody there. Do you know that how you will handle your business, somebody else cannot handle it that way, right? They will only bring
Yes.
peanuts to you. And even if the business is running, probably you have that business in a building that's like a mortgage property. It's your
Okay.
building. You bought the property, but you've not finished the payment. Now you
Okay.
can no longer go to make so much money like you used to do. Somebody is running it for you and they are only able to bring a little piece from that money or from that business. How do
Mm-hmm.
you protect that property? You know, when we buy house in this America, we are not the owners of the house. The house is in with the bank until you finish paying, right? So you are still a
Yes.
debt. Now, the beauty about insurance is protection, is protecting that property. That's why sometimes when you come in the individual section, they want to analyze because it's not the same for everybody. They want to assess to see how much do you really need to qualify for an insurance. And it's not even everybody that gets it anyway, because if you have a health challenge, you won't get it. You will not be qualified. So it is something that you have a business, you need to protect that business. That is why you need that protection.
Okay. Yeah. So before I read the next question, I also have another question. So, for instance, what is the limit when it comes to age to apply for life insurance? Because that's the first question in the two questions I want to ask.
Okay, so thank you so much for that question. So I will say there is no age limit, but you have to qualify. Because if you have medical issues, comorbidities, now medical issues is not just hypertension or diabetes. For diabetes, if your age, there's what they call A1C for diabetic patient. If that level is above normal, they are not going to grant you, they're not going to give you, because you know these companies, they are taking a risk on your life too, because if anything happens to you, they are going to be the ones to lose. You've contributed only $500 or $1,000, and then they are paying you 250,000 because they are binded by the law to pay the money if anything happens, as long as your policy is in effect. So there is no age limit, but then you must either be a US citizen, a green card holder with a social security number, okay? Or even if you're a student with a social security number, yes, you will qualify. But then you must pass the medical exam area. That is where they are very, very crucial about that. If you are sick, they're not going to grant it to you.
Okay. So the next one is does benefit only come when there is death or sickness? And because I know someone, she is also an entrepreneur, but she was actually marketing to me that I should do register with them because she gets money from she borrows money from her policy. So my own question right now is the benefits only based on death, sickness, or are there other things that one can get that is not
Okay.
death, or you can borrow, or yeah.
All right. Thank you so much, Ma, for that question. So you know that when you put in money in a CD, right, or in a mutual fund, you have to leave that money for some time to grow, and then you'll be able to get it back. So the life insurance policy is almost similar to that. Now, if you fund the account very well, some people will decide to pay every year for your money to grow better by compound interest. Some others will decide to pay monthly. Some others will pay every 6 months. Now, if you fund that policy very well over time, you will be able to access that money to either your cash value. There's what they call cash value. There's what they call policy value. And there's what they call the cash surrender value. Okay. And the benefit. Now, over time, you'll be able to access that amount. Either you're taking a loan or you're borrowing from it. Okay, it's your money. It's as if you are now your bank. You will borrow from yourself and put it back if you want to. If you don't want to, anytime you die, if they want to pass on the death benefit to your family, they will subtract the amount you have taken. So it's like you doing business within yourself in that same place. Now, you can access it while you are still alive. That's you borrowing from it. You can assess it if anything happens that you have a chronic condition, a critical condition, or a terminal condition. Those are three different words: chronic, terminal, and critical. Chronic, for example, somebody that has a prostate cancer. You can still work, oh, you can still go to work, not that you cannot go to work. But because it's a chronic condition, the company is going to pay you that money. If you request for it, you will get your money. Then, if it is a critical condition and a terminal illness, they're going to pay you 90% of the total death benefit. Then, if anything happens, peradventure, the unexpected happens, and you die, they pay your family everything, including the amount that has grown, the cash value, all the interest that has developed in that amount you purchase. For example, you purchase a 250,000 policy. And then over a period of 10 years, probably you have gained about 50 more thousand or 80 more thousand. That extra money will be added to that 250,000 and everything will be paid to your family.
Thank you. So the next question is how does US probate treat beneficiaries who live outside the country, and does this delay or complicate assets distribution?
Yes. So for US probate, they will still go through the regular process, but because the beneficiaries are not here, it may take a longer time, but over time it will still get to them. If they go through and then whatever is remaining, it will still get to the beneficiaries. And the same thing also applies to the Index Universal Life Insurance Policy. If probably you put a beneficiary that is in Nigeria and anything happens to you, as long as that person, that's why you have to have all your information in a file. It is written, it is documented, and then your agent too must know who your beneficiary is, all of those contacts, right? If anything happens, they will reach out to that beneficiary in Nigeria. They will call the beneficiary and transfer the money to that person.
All right, thank you so much, Mrs. Oke. Since there is no other question, I have one more question to ask, and this will benefit the retirees, the people who have retired, and elderly ones. So I have one client that just retired, and then he was talking about how he tried to get some money from his um account, I think his retirement account, or I don't know, for, and then the money he got, he wanted a lump sum of money, and I think about $10,000, and there was extra money that was taken for that service. Like, say he wanted 10,000 and they took like $15,000 dollars, and he was really not happy about it. So when you say people can actually borrow from their savings, is it limited, or I mean, do people still pay for borrowing from their savings?
Okay, thank you so much. So with 401k, right? Before you assess the money you have in your 401k, you should be 59 years and a half, right? That's the retirement age that you'll be able to assess the money without penalty or without those taxes deducted from you. If you assess the money earlier, they're going to take those penalty. They're going to charge you for the taxes because you're not up to 59 and a half years. Now, for 401k, that is their own. For life insurance, which is the Index Universal Life, the cash value that if you want to take money, you're growing money, right? If you want to take money, it is the cash value you have accumulated. That's what you can take from. Now, that loan is 2% interest. You are borrowing from yourself and you are paying back to yourself. So if you pay that interest, it goes back into your policy. It's not going to the general market. It's going back to you because you borrowed from yourself. And that money will continue to grow. Now, if you decide to say, okay, I don't want to borrow, I want to just leave the money there to grow, there's a way they can actually prepare your policy, especially for retirees. You're already in your 50s, in your 60s, in your 70s, and then you want to get one policy. If you are approved, that's how the medical tests and all that. You can schedule that policy to be paying you back every year. They can arrange that policy. The same thing with your annuities. They can arrange it in a way it will be paying you back every year. So you can decide to say, okay, I want to put this money in my life insurance policy to grow for a period of time. After 7 years, after 5 years, after 10 years, I want to start collecting money back. It can be arranged like that. So that you discuss with your agent to be able to do that for you.
All right, thank you, ma'am. And the last question that we'll be taking today is how can families plan early to avoid unintentionally disqualifying them early to avoid unintentionally disqualifying themselves from Medicaid due to lack of knowledge about spend down rules?
Okay, so families, first of all, planning is very important. But then the question you want to ask yourself, do I want to depend on Medicaid? How many of us have been to nursing homes? If you have been to nursing home, is that a place where you really want to retire? Like, I'm sick, I want to be in nursing home. Now, if that's a question for you to answer, if that is not the kind of place you want to go, how then do I need to ensure that in my later years, in my old age, I do not end up in these nursing homes? Adequate planning, adequate saving. Now, build assets that will last a long time. If you are into real estate, start to make arrangements to be sure that you are able to pay off those mortgages before you retire. So that by the time you retire, those mortgages will be paying you back. Those assets will be paying you back. Pay them off in a way that by the time I'm this year, I'm done with all these debts and I'm not owing. Because debt in America is the fastest way to poverty. Whatever you owe in this country, you can't run away from it. 100 years, go and come back, they will transfer it, you will still pay. So debt, avoiding debt as much as you can is one other way to plan. Avoid debt. You see all those credit card enticements, avoid debt. All those loan app and loan with all their terrible interest rate as much as you can. We know that sometimes emergencies come and then you need all of this, right? When you take them, as much as you can, try to pay them off. Avoid debt as much as you can. And then if you decide to say, okay, at least there's free healthcare here that we don't have in Nigeria, I want to be part of Medicaid. I want to enjoy Medicaid, okay? Make sure that if you are willing your property, you have to do that before 5 years before you access Medicaid. Because if you decide to say, oh, I'm accessing Medicaid next year, and then you go will your property to your children this year, or you will to your children last year, they're going to trace it and they will see it because they will look back 5 years. So as much as you can, if you know that, okay, I want to use this Medicaid at the end of my life, or I need that free healthcare. Okay, it's your decision. Good and fine. But as much as you can, make sure whatever property you have, whatever asset you have, you are giving them off as far back as 5 years before you access Medicaid. Thank you.
Thank you so much, Mrs. Oke. I mean, this is an eye-opener. I mean, you've taught us a lot today. I am glad that I'm in this place today, and I'm glad that a lot of people um came online too. So we can also tell our friends to go back to YouTube and learn from this session. Mrs. Okay, I'm going to send your numbers to people so that they
That's
can
fine.
contact you, people who have questions and people who want to start something. I'll send
Thank
your
you.
numbers. Also, people will be calling you as well. And if you need to call Miss Okay, a number, I mean, I think she called out a number earlier on today. I don't know if you want to call it out again so that people can have it and give you a call to, to get more information.
Okay, there's one question that says, how about those with bad credit? Is it not canceled after 7 years? Before they cancel your bad credit, they also look at your credit history and see what the assets you have, right? So the system will
Mhm.
not just go in and cancel your bad credits without you making payment. They will not just forgive it and leave it like that, right? Especially with this current administration. If you look at this administration, they are very, very like prudent with financial issues. If you look at all that is going on the news. Yes, most bad credit will cancel after 7 years, but before those debts are canceled, what are the things that you have been doing? Have you been acquiring assets and you say you don't have money to pay your debt? Those are questions you need to answer.
Thank you so much, ma. So it's 7 already, and we like to keep to time. Thank you so much. I really enjoyed today's session. God
Thank you
bless you.
so
Thank
much.
you. And thank you to everyone who joined the line. May God bless all of us. Happy New Year to us. God bless
Thank
us
you
and
for
prosper
having
us
me.
this year. In Jesus' name.
Amen. Thank you so much for having me.
Yes.
You have a
Thank
nice
you.
day.
Yeah. Bye-bye.
Bye-bye.